Everyone, it's Nick with Us versus Herd. If it's your first time here, hit that subscribe button. If it's not your first time here and you want to get notifications for when we go live, hit the bell below as well. And if you're not yet a member of our free options trading group, the link is below as well. Keith, what's going on? If you're here right now, say what up. I'm actually running actually 20 minutes behind the day. Normally we go 30 minutes after market close, but today was all over the place today. Shotgun, what's going on? Shotgun, I think you said your name was Dovey in the group, right? I mean, anyways, but yeah, I definitely want to apologize. I'm really trying to stick to that half hour. Got you. Half hour after market close, but we ran a little bit behind the day. Nicholas, Mister, what's going on? Man, Baron, how you doing? Nice to see you guys rocking with me, even though I am late. I am late. Sammy just posted on the Facebook. It gets no live feed. No. Aisha, Tom, if you're here, we'll say what up. If you got paid today, comment got paid. If you lost money today, comment learned a lesson. Tobin, what's going on? Greg, what's going on? Sammy. Anyways. Okay, yeah, Facebook is kind of getting crazy, or YouTube is kind of getting crazy. Keith learned a lesson. Baron's on his way home. Yeah, that Dow was down 600 points today. How about that? And as you can see, like the S&Ps we gapped up back in here, and we just gave it all back over the last three trading days. After that election gap up on the S&Ps, after we gapped up large in the election, it just gave it all back. Oh man. Shotgun learned a big lesson. That's not good. Baron learned. What's going on? Yeah, today overall was kind of a slow day for me. Kind of give you some background on things. I actually was loaded up on positions. So I was loading up on positions. So back in here, and we gapped up, and then I had a lot. I actually at the height I had like 12 positions on, and then in here I added some more positions, and then really I started taking positions off Friday. As you remember, Friday I had a big day, and then today I took some more positions off, and I haven't been adding, mainly because I've been kind of wary of my gains, and it kind of sounds kind of weird because I've been making a lot of money lately, and I've been making a lot of money pretty quickly, which gives me some concern and makes me a little cautious of putting a lot of more money in there, rolling those profits in. Really just been trying to take it a trade at a time and trying to go slow, because it's easy when you start making money like this. It's easy to like get yourself hyped up and saying, hey, I have a lot of winning trades right now, I can win. And that's when your strategy starts turning against you. So right now, after and the same thing goes for losing a lot of trades too. Like right now I'm just using a lot of caution. I had like 12 positions on, and today I sold off 3 of them. I sold off Berkshire Hathaway, I sold off Square, and I sold off Tesla. And the reason why I started offloading and not really loading up in Berkshire Hathaway, I only made a $14 profit. That was one of the trades I put on last week that I said that I wish I didn't put it on, and I was down like 50% on the position. And Berkshire, the reason why I said I didn't want to put this position on, or shouldn't have put it on, is because liquidity was super low and I didn't get the best pricing. And as you can see here, when it ripped up, let's go to BRKB. It ripped up here, and then I put a position on. I think it was like when it was like 218. I bought the what did I buy? I bought the 212 puts. So it was like 218. I bought the 212 puts, and it went all the way up to like 223 a couple days ago. And I still hold those puts, and I'm like, this is not the best trade. And if I really believed in it, if I really believed in the trade, I probably would have averaged down that put. But I didn't really believe in the position. And today on Friday we were headed down market. That position didn't come around, and then finally today the position came around where I was actually like kind of profitable. I could have made a little bit more money, but we made $14 on it, and I didn't really want to tie up more capital because it was the bid and the ask on this was like super wide, and I didn't really like putting this trade on in the start, and it also expires this week. So at least 212 puts. I mean, it was $1 the bid, $1.30 the ask. I sold. Where did I sell it for? BRKB. I sold it for like I sold it for 91 cents today, and the bid and the ask were like 30 cents, 40 cents wide. It was just, it's just terrible. So that's why I didn't like that. So I didn't make a lot of money in that, but I don't think this trade was going to end up ever making a lot of money in that. The big winner today was Square for me. I had a strangle on here. I had the 70 put and the 81 call that I bought last week. It cost me $1. Let's go. Cost me $1.81. So this was a pretty big trade. Like for me, I like to do strangles like $1.50 or under. So this was a little bit heavier, but Square's IV and everything was a lot. Their options are a lot more expensive than other stocks at their price. So I went a little bit bigger, and I sold it today for 309. And this was actually a losing trade on Friday that finally came around today. I was actually hoping for the downside on this after we had, we had 1, 2. I put the trade on up in here when it was just kind of hitting this wall up here. Let's zoom in here. So when it was like hitting this wall at 83, actually no, I put the trade on after that. I'm sorry. I put the trade on this day right here, which was this Thursday. So on Thursday I put the trade on when it was just kind of chilling here at like 76, and then we went down. And Theta was really eating away the option, and I didn't really started making money until it finally today, it broke through that 70, and I actually sold it off too early. I sold it off when it was like 69.55 because I was so money. I could have made some more money, but I was on the go, so I didn't really want to push it too much. And Square, my target for Square really for the down move was like 65. But I figured because Square's a stock, like if you've never traded Square before, Square's the kind of stock that'll rip down and then it will rip up. So I was definitely very scared of it ripping down so fast. And then as you can see, it tried to recover here today. It really ended up at the price where I sold it today as well. And as you can see, like I didn't want another situation like this. So look on Friday, we gapped down, but then we had this huge rip up. Obviously, it gave it back, but with Square, sometimes you can never really be too sure which direction Square wants to go. Square kind of has its mind of its own, and when it goes down big. When it rips up huge. So, when it rips down like that, you got to be very careful because there's a lot of buyers that want to come in on Square. So, and then I sold off Tesla. So Tesla, I had a credit spread on. So for November 23rd, I had this. I've had this on for like a week. Let's go to Tesla. Yeah, so I bought this on November 6th. What was it now? The 12th. So almost a week I've had this trade on. So I got $1.31 credit for it, and I bought it back for 95 cents. So I made $36. But for like a credit spread for only one contract, that's actually not bad. I normally aim for 50%, but what I was really concerned about Tesla was, yes, it came down. We actually touched down here. What time did I take this off at? 10:30. So yeah, I really did catch the bottom on this pretty good before it bounced. So I got the most I was going to get out of this trade. It was really the Tesla. What I was really concerned about was on Friday when we had the pretty big down day. Tesla really didn't go anywhere, didn't sell anything. So when it ripped down below today, my max profit on this was $1.31. I made $40. We made like 30%, which is pretty good. Credit spreads I can only shoot for 50%. I was selling the 345 call and I bought the 347.50 call. So I had a $2.50 wide spread on there, and I collected $1.31, and I bought it back for 95 cents. So I get to keep $36 out of that spread. So that's a pretty low risk trade, high reward. But you know, considering it dropped like 19 points from the day, and me only making $36, this shows you that the option prices were just crazy, really inflated. Let's see, JC got some GE puts. Yeah, I bought some GE puts today too. After I sold my entire position, and like I told you guys on Friday, like GE is the type of stock, any green day or any rip, I'm pretty much shorting right now until it gets to like the $6 or $5 range. I typically don't like to trade things down below there, but if GE keeps giving, I'll keep taking. So today, let's go into GE. I put a position on. I bought the. I don't know if it's easier to see on here. Today I bought the GE $10 put, or I'm sorry, $6 strike for November 30th for 7 cents. I bought 20 of them, and I bought them at 2 different times. I bought them at like noon, and then I bought it like 1 p.m. And the reason why I did that is it ripped down, and I didn't have a position, and then it ripped back up. So I bought a position at 11:53. Which was right around here. Yeah, like right in here, where it was like kind of rejecting this 820, and then it had another go at 820, and it rejected it, and then that's why I put another position on this down move right here, and yeah, we did close below 8. So, you know, I was shorting GE when it was in the 10s, and I was shorting it in the 9s, and I was shorting it in the 8s, and now we're shorting it in the 7s. So, you know, just to show you what's going on with that stock. So, you know, my goal for GE really turn the 7 cents into like anywhere between 20 and 30 cents, because as you can see over the last 2 weeks, it's kind of what I've been doing. I'm buying for like 7 cents, selling for 21, sold for 7, bought for 7 cents, sold for 15. Bought for like 10, let's see, about 10.6, so it's like average of 7 cents, sold them for 29, bought more for 7 cents today. You know, I'll be looking to close them out for between 20 and 30 cents on that. So, and for like a low price stock like GE, the reason why I didn't sell buy this week or next week is because to get to the kind of move that I'm looking for, it's gonna take time, because now it's like a penny stock, and for it to move like $1, I mean that's like 15%. You know, for a stock. So, you know, if you want GE to move $1, like yeah, today it moved 59 cents. But I mean, look, that's 12, 13%. I mean, sorry, 6 or 7%. You know, if I wanted to move $1 at this point, you know, it's gonna be like 15% move, 14% move. So, you know, you definitely want to give yourself time on that. Like I did, I gave myself a lot of time on my last GE puts. So I'm always trying to push it at least like 2 weeks out. Ray Lee got paid. DBX 250 profit, nice. What's going on, Ahmed? What's up, Richard? If you're here right now, say what up. Sorry, I'm a little late today. There were some questions in here. Shotgun, my first time playing Amazon, bought 3 calls. Expire Friday, average 630. And you got paid on Amazon, nice. Secure kit. Yeah, no, I'm late. I'm sorry. I've been really consistent. Just give me one day. Got paid off Square. Yeah, Richard, so did I. I don't know if you saw. I went over that. Somebody was asking about. Oh, King Jacob, can you explain how margin requirement works when selling options? Yeah, so it all depends on what kind of broker you have. Like Thinkorswim holds more margin than Tastyworks, and Robinhood holds more margin. I think Robinhood may hold. I don't remember if it's Robinhood that holds the same amount of margin that Thinkorswim does. Oh man. Jack, hire self, $50, man. Man. That's the biggest donation I ever got. Like, man. Thank you. You must have got paid today. And thank you so much. Wish I could take you out to dinner with that $50 you sent me. Oh man. Thank you, Jack. Thank you. If you guys don't know, Higher Self is his name is Jack in our options trading group on Facebook. So if you're on Facebook and you see the name Jack, that's who he is. Thank you. Seriously, thank you so much. Thanks for supporting the dream, the channel, everything that we do here. Thank you so much. Now, you made me lose my concentration. What was I talking about? I was talking about margin requirements. And I'll thank you again later in this stream. But right now, let's concentrate on margin requirements. So, like, if I'm shorting, let's say I'm shorting some GE calls. Like, GE, like, you kind of just have to put it in and see what the margin. And also, margin requirements change. Like, margin requirements change, like, on Tilray, Cron, like, weed stocks. Like the brokerages change the margin requirements if the risk increases on their behalf, just so you know. So, you know, if you're let's say I'm going to short some puts on GE right now. You know, my margin requirement for this, let's hit review and send. They're saying my max loss for this is going to be $730 if I'm selling naked, of course. You know, and they're going to however like Tastyworks is like the cheapest in terms of margin. Yes, my max loss is $730, but in buying power, they're only going to remove the buying power for me in this $131. Mateo, I'm here. I'm late, but I'm here. I'm sorry. Late one day. I'm sorry. But if I go over to Thinkorswim, let's see what GE what puts 7.5 for next week. Yeah, they're going to they're going to do 113. Okay, so yeah, I mean, you're gonna have to kind of play with it. Like, these were definitely a lot more expensive. Let's do like a credit spread on Tesla. Let's do like a credit spread. Let's do like a short call spread. So they're saying 160. This is for November 30th. Where did I get the 345? So we're going to sell a vertical. And they're going to be 160. So they're pretty similar. Actually, that's kind of interesting. I haven't actually looked at it in a long time. Thinkorswim is matching. It used to be like in 2017. Margin requirements for Thinkorswim used to be more than Tastyworks, and now they're matching it, which is interesting. So, Jack, I haven't traded Yelp in a long time. I should start. I know that they're down by a lot. Where do you think the bottom is on Ford? Let's see here, Ford. I've been talking about Ford, so you guys have been talking about it a little bit in the last couple of weeks, and I said that Ford is in this kind of consolidation period. Now, it bounced from 817, which is technically now the bottom. You know, the market's dropped a lot in the last couple of days, but Ford is continuing to move higher. I mean, it's up 1% today. So, you know, the one thing that I would be careful about on Ford, like especially if you're buying premium, like make sure it's like furthest out as possible. Like if you did a strangle or you buy calls, make sure you can do whatever you can afford, like 45, 60 days out, because this could essentially consolidate for a month, 2 months, and really just eat away at your option. So just be aware of that. But I mean, it looks like for me just consolidation right now. It looks like it wants to, you know, consolidate for this next leg higher. But at the same time, this could bleed out your option. Like if you did something for like next week or even 3 weeks out or even 20 days out, like this could easily bleed you out. USO opinion. So on, oh man, I'm looking at oil here. Down, man. I was actually looking at trading some oil futures last night, and I'm glad I kind of didn't, because I was actually thinking about going long. And what I was talking about, I think I talked about, was it Thursday or Friday? I was talking about oil. That, as you can see, like this down move is just, there's nothing stopping it. Nothing stopping it. No consolidation. I mean, it tried to here a couple days, but really it hasn't consolidated. It hasn't stopped. So I'm like, for me, I missed this short move. Like for me, I wasn't trading it when it was on the down moves. So now my goal is to wait for the long move, but you know, I'm not going to be the first person to go in there. I'm not going to be the first person. Like I'd be waiting for some periods like this, you know, after a big drop, consolidation, or you know, some period like this. But right now it's very hard for me to trade this type of chart. Like now, if this was like, let's say it broke down past, oh, you can't see that. Hold on. Let's say for USO, it broke down past 11 down here. Like let's say I was sitting at 10, then I would probably trade it. But right here, you know, I'm not seeing a trade for myself personally. But that's just me. Like for you could be really good at these type of charts. Like for me, I know that my strength, like as a trader, you have to kind of know what your strength and weaknesses are. And charts like this, I often get tripped up on, or I often get stuck on. So I tend not to trade charts like this. Like for me, a better trade was on Morgan Stanley a few weeks ago when we fell down at like 42 here at a low, and it was just kind of chilling here for a couple of days, is when I made some quick money when it bounced up on the earnings, but it just returned back down that level, and now we're headed back to that level again. So maybe down here I might actually put another trade on down at 42. But for like USO, in terms of chart, like for me, I'm waiting for a consolidation or for it to go down towards more of the 52-week low. I guess good news is the pump will be cheaper. Yeah, Greg, Ford will sit at 9 to 9.5 for forever. Yeah, they'll bleed you out. So like I was saying, like a lot of stocks like Ford and them, they're not a growth stock. Actually, hold on one second. I gotta plug my Mac in. All right, we're back. Had to plug my Mac in because I noticed that it was down 50% battery, and I've only been on this for like 20 minutes. So I was like, what the heck is going on? Apple, yeah, Apple's an interesting one right now. As you can see, CNBC's easily tagging it as the reason why the market's going down. I mean, it's down 5%. And I was talking about this a couple weeks, I don't know if it was a week ago or 2 weeks ago, but I was actually thinking that it could return down to this 190 level. And now it's looking very, very likely. You know, I would like to see, like, if it comes down to this 190 level, I'm actually going to probably trade it. You know, if we can come down to this 190 level, I don't like trading big gap ups and kind of like these clouds, like no support up here. Kind of, you know, it looked like it wanted to build some support, but as you can see, kind of like, what was it? There was another, there's maybe it was Microsoft that basically was making like lower highs, and as you can see, we're just kind of having a continual grind down. You know, like right now for stocks like this, I mean, the best thing that they can do is like consolidate. Like Ford, the best thing it's doing right now is consolidating. Like if you're long, the best thing that you can look for in a stock right now is consolidation. And right now there is no consolidation up in this area. You know, we're having some gap fills here, so you know, tomorrow, I mean, it looks like it wants to come back down to this 190 area. You know, how did it close today? I actually wasn't watching because I wasn't really, yeah, closed terribly. I mean, I think, you know, this is my opinion. I think we're going to be facing some pain here, guys. Like, you know, we just have to take advantage of it as traders. I mean, our long accounts, like our stock holdings, 401ks, stuff like that, are going to feel some pain. But this is where your options trading expertise is going to kick in. This is where you make the money. You know, And like I was telling somebody else, like some people were saying, like, you know, do I have insider information because I've been posting pretty large gains pretty consistently? And I was just saying that's really just the market that we're in right now. Like 2017, we were lucky. It was very rare to see get like a 300 to 500% winner because volatility was so low and stocks were just like not moving. We would literally sit at the desk and just like go away, you know, sit here, go out to lunch for an hour or two, come back, same price. I mean, like, it was ridiculous. And now, like, you know, stocks are moving 5, 6, 7, 8% at a time, and we're able to really capitalize on that. Now, you know, I think that I think the problem is that people that are selling options or shorting options, a lot of people have the misconception that just because implied volatility is high, you should automatically short them because, you know, a lot of say, hey, when IV's high, I short options, and in theory that sounds like a good plan, but when all these stocks are exceeding their expected move, option sellers really get screwed. I mean, really get screwed. I mean, over the last 2 weeks, I couldn't tell you how many times I made money on stocks that exceeded, and not only exceeded, but far exceeded the expected move. So option sellers are having a hard time in this environment. Just saying, you know, I sold some Tesla calls, and squeezing money out of that was like, it took a while. It took a while, and my gains weren't very big, you know. It's a carry kit. Yeah, I mean, I like to sell options, but right now it doesn't seem like that's very profitable. Just because the range of the moves and the expected moves, like, yeah, it could return. Like if you have patience and time, but depending on your position, you may not have time. And the option seller needs time on their hands, and they need implied volatility to decrease, and they also need to use theta. So if you don't have time, and implied volatility is high, and you're in the money, I mean, you gotta cut it loose because you don't want to risk getting assigned. See, my calls are for January. I'm just impatient and anxious. Yeah, I mean, I think honestly, the market since 2017 has been just a ginormous. I don't like to say bubble because everyone says that. It's just the market can't go up every day and sustain that. Like, you can't go up every day. Then that's kind of what I was saying is, I've been making consistent returns every day. I've been making a lot of money every day, and that causes me to not go back in as heavy as I would have if I didn't make that money. So if I was making like $100 a day, right now I've been posting over $500 days for a little while, and you know, which is great, but you have to be careful. It's great to make money. You just don't want to give those back. You don't want to give your gains back. Hamed, yeah, I did that I did it the first, I think, 15 minutes. So if you were not here for that, hit the replay. Secure Kit been hurting to sell past few weeks, changing strat slowly over a mix of. It's new to me. Yeah, I was a big premium seller, but it wasn't profitable for me in this environment. So I had to flip my strategy, and strangles for me have been paying out enormously. That and just buying puts on GE, which I guess buying puts on GE is not like that smart because anybody could see that's a failing business, and a lot of people were holding stock on it because it was around for 125 years and people believed in the company. But what's your watch list look like this week? So a couple of my targets, like I told you, one was Apple, target 190. Once it gets to 190, I'll be looking for a trade there. Microsoft, another area for me to trade Microsoft is 105. I'm looking at that as well. Alibaba, I like to have a trade on Chinese stocks at all times right now. I actually did do a trade on JD today that I didn't go over. I bought the 22 put, and the 2250 call for this week. The reason why I did it for this week on JD, they're sitting here at yearly 52-week lows today. We're sitting here at 52-week lows, and they have earnings this week, and also implied volatility actually at the time was lower than this. And for earnings, I thought that was it was a good risk to reward ratio. Let's go to today. Yeah, I got 91 cents, which was pretty low. Obviously, it's a $22 price stock. So my goal for this trade was either this is going to fall apart before earnings or it's going to rip up before earnings. You know, if it goes up to 24, I'm good. If it goes up to 26, I'm good. If this comes to 20 or below, I'm good. So I really feel like this is either going to rip before earnings or fall below before earnings. And as you can see, like JD today, you know, was really struggling in the start of the day. You know, it ripped and then it dipped and then it ripped again. And then it really just kind of looked like it wants to just kind of head lower. So I wouldn't be surprised if we see like 20 or 19 before earnings. That's really why I traded it here. You know, any trade news regarding this stock, I mean, it's going to send it lower. And also, it's pretty safe to buy options before earnings because you're not going to have that IV crush that you would normally have until after earnings. So my goal is to take this off before earnings on this one. Hamed, can you look into CRM? I think Security quit. So CRM. Who else was CRM? Selling premium is attractive in bull markets otherwise. Yeah, in 2017, I sold a lot of premium. Sold a lot of puts. But now for option sellers, it's very tricky. It's very tricky. But it doesn't matter whether you're buying options or selling options. It's very tricky. You know, buying and selling options, like trading options in general, is probably one of the hardest things that I've ever had to learn. But now that I've been doing it for a while, you can make money for a long time on it, if not forever. CRM looks like it has the potential for a decent move in my opinion. Yeah, I mean, they've been making some big moves here. Let's see what the expected moves are for CRM. Come on. Oops. I got the wrong ticker. Expected move is $5 on this guy, and it moves 6. They got earnings coming up. You know, I probably should be looking into a trade probably for the 11th, the November 23rd, 11 days out. So it's expected to move $7 by next week. This week it's supposed to move $5. It's been exceeding that. You know, to do something here, you could get a decent price. Let's see what the daily look like today. And also, it's hard to if you don't have positions on already. You know, on a day that things just go straight down, it's hard to put positions on. That's why I didn't really put any positions on. You know, today's the kind of day that you take positions off. Not really a day that I look to add a lot of positions on. You know, if I was going to add it, I probably would have definitely added in this, you know, 130 to 133 range. Seems like it wants to bounce around there. But yeah, I mean, this in terms of targets, you know, it is sitting down here like 130. Could easily come down to like 125. You know, like this stock has been ripping for so long. It's hard to say like what actually is real support. Like, and that's what's been kind of, I think, tripping people up, because you can't tell, because stocks have been going straight up for so long, and they've never really built any support. Like, where is the true support here? You know, and I think in 2018, 2019, you know, next year we're going to be developing a lot of areas of support, because it's gonna have to develop support. Otherwise, we're just going to go straight down. Greg got a strangle on JD. Nice. CRM seems to be at a strong support resistance level. I mean, it's bounced back here in the past, but that was only a couple days ago, and there's not really support at 130. There's not really there's not like really what I would consider strong support or even halfway strong. There's really nothing here. There's nothing. I mean, we can go to the 2-year chart because it might give you some more perspective. I mean, really, it hasn't had a major drawdown except like down in here, which kind of distance support. Like what I would be looking at as like for a bull, if I was bullish on the stock, if it can consolidate right in here, like 135 area, if it could consolidate in here for a few weeks, then you want to do that. But I mean, this stock really hasn't had much support. I mean, it has its drops, but it really recovers really fast. And then it has its drops, and then it recovers really fast. But there's really no areas that it really stays the same price for a long time. Ray Lee's missing Linda. It's probably because she probably wrote me off. She probably swore me off because I was late today. She's like, F that guy. I'm not going to be on the stream. He can't show up on time. I'm not going to. There's actually over 40 people in here. Thank you guys. Even though I'm late today, you guys are still supporting. And Jack drops the 50 bomb. I owe you, bro. I owe you. Yeah, she probably thought no stream. I will send her the link, and we'll let her know that we missed her. Straight right up. Yeah, she slammed the door shut. She probably hit unsubscribe too. I'm just kidding. She probably didn't do that, but what? A couple of positions that I still have on. I still have my Starbucks position, which it looked like it wanted to take off on the I had the 69 call, 67 put. So it looked like it really wanted to take off above 69. As you can see, we hit 68.98. And I thought that we were going to bust through that because even on the down days, it was a good time. I left the position on because on Friday, even on the down days, it ripped. It still went up quite a bit. And then today it was only down 1%. So we'll see if it consolidates in here. I still have that position on. I'm only down $24 on that. My cost was $100, so I mean I'm down like 25%, which in options, as you know, is not really that big of a deal. So right now for Starbucks, I'm looking to see which kind of direction it tips. Obviously today it was lower, but I mean last couple of days, I mean it's just really choppy. Like if you look on Friday, I mean just sideways chop. And I was actually, because of the sideways chop, I was actually expecting to be down a lot more on Starbucks than what I am, which is is pretty interesting here. And as you can see today, we had a one, a $1 move on Starbucks and pretty much just laid there. So, if the market, depending on what the market does this week, I don't know what direction we're going. I actually was really, really surprised that the market. I mean, I thought we would have a down day. But I really didn't think we were going to have, like, a ginormous down day. I guess nobody did, right? And then I have puts on Fit that are, like, I was sitting at max loss. I got some money back on it last couple days. But Fit, they expire this week. The one thing that I regret about Fit is I didn't give it enough time. I only bought options 2 weeks out, and for, like, a $5 stock, I should have bought options 30 days out, and that was, if I lose on this trade, it's probably because of time more than anything. I'm pretty sure that it was going to come back down. If you look at the chart here, it's coming back down, and if I lose on this trade, I don't know if it's going to get to 5 by Friday. We'll evaluate things on a Wednesday. I usually evaluate things on a Wednesday, what's going to happen, and then I'll take whatever I can get. Or I'll take this trade off and put another trade on for further out if it's something I still believe in. Take a look at KDP. Keurig. Let's see what kind of volume they have on here. Yeah, I mean, for me, like I've told you this, guys, before that, one of my criteria is trading higher volume stocks or options, and volume here is only 120, 24. Open interest is okay, I guess, but really nothing was traded here today on these. And honestly, like let's go to the, is this on the 1 year? Yeah. This chart looks so boring. Like, it just stays the same price. Like, nothing's being traded here. So, yes, it did have a big gap up back in January. But since then, really, you haven't been rewarded. I mean, yeah, I mean, it's gone up. But for an options trader, I mean, they're just going to bleed you out. If you own stock, that's probably different. If you want to buy stock, I mean, that's something else. But, you know, they're just gonna bleed you out here. There's like nothing going on. This would be something that if you believed in the stock, you would just buy a stock and you'd forget about it for 5 years and come back and hopefully it made money. But for options trader, it wouldn't be something that I would look into. For Netflix, to answer your question, I'm really looking for like around 280 is what I'm looking at right here, down here. It's bounced here, back in here. It bounced back in here. So I'm actually looking for like 280. Their options are obviously going to be pretty pricey to play Netflix. So it kind of depends how you want to play this. You could do like a weekly trade. Like if you're looking for cheap, which I know a lot of people are, you probably want to do like a speculative play. So you'd probably want to do like if you think it's going to fall, you know, I would probably wait now. But if you're going to do something, you'd want to do like 39 days out, and you'd buy something down here. Like you'd buy like the $200 put or something like that. But for me, I'm probably waiting until like it gets around like 280 area. I'm bullish on Netflix as a company. However, I do get concerned about their debt load and how much they're spending on content. So their balance sheet is not the greatest. And this is another stock that just went up all last year and earlier this year. I mean, it was really met with no resistance. You know, like I was telling you, like 2017 was a boring year. I mean, look at these bars down in here compared to what we have now. So this is why we're making money right now. And back in here, pretty much all you could do back in here was sell puts or iron condors. But it was also risky because implied volatility was low. So you were also risking more. You were risking more to make less. And in this environment, we're risking less to make more. So just different markets, different strategies. That's all. Abel, what's up? Thank you for always watching the videos later and commenting. I definitely appreciate you commenting on the videos, watching the videos. Excellent. I love this market. Yeah, I mean, I hope it never changes. If this goes back to like the 2017 market, I'm going to quit trading options. No, I won't, but I'll be bitter. Facts regarding the balance sheet also needs to consolidate. Yeah. So I mean, for Netflix, I think I would play the 280 bounce. Otherwise, you're gonna have to do something like speculative for further out. But that's risky right now because the implied volatility is high. I mean, we're coming up high. You know. See these. I mean, these are at like 80% for this week. I mean, they're not the highest that they could be. They definitely could be a lot higher, but you know, it just had a 3% down day. What are your thoughts on Apple puts right now? We just talked, Chetan. I don't know if you were here. My target, like I told you guys, is 190 down in here for Apple. So I don't know if that's going to be a good time to put puts on, but for me, I'm looking for consolidation. My goal, I'll tell you my trade idea right now for Apple. My trade idea for Apple, consolidation at 190 like this. IV dies down and I buy a strangle is what I'm looking for. So a couple days sitting around the 190, 192 range, 190 to 192, somewhere around there, maybe even 189, 188. We'll give it a $4 range, 188 to 192. If it sits around there for a couple days, I will then buy a strangle once IV dies down. and then I will wait. Can you explain a strangle, like if you wanted to put one on, if you want to put one on Netflix? Yeah, so a strangle basically just means that you're buying a call and a put at different strikes. So like you can adjust it depending on what you think the stock's going to do and what your risk is going to be. So like for this, like this orange bar here on Tastyworks means it's in the expected move. So like what you could do is, let's say I want to buy this 285 put and this 300 call. This would be a strangle where I think it's going to go below 285 or I think it's going to go above 300. If you want to, you can do like a bullish skew, like if you, can't talk today. A bearish skewed strangle would be you'd be buying a put closer to in the money, and you'd be buying the call further out for like protection to kind of skew it that way. If you want it to be just right at the expected move, you could do something like this where it has equal chance of going up or down. It really depends on what your goals are for the trade, where it is on the chart, and what your risk to reward ratio really is for something like this, and if it really even makes sense for you to do something like that. But yeah, I have another video on strangles in our, thanks Abel, on our page. But this was just the quick and dirty version. Thanks, I'll gotta feed the fam. We can't handle loneliness. All right, I'll be here tomorrow, half hour after close. But yeah, we got a few minutes left on here. Anybody have anything else before we sign off? I was a little late today. Streams at 46 minutes, so we're on the higher end. So shoot me some stuff here. What else did I do today? Close Tesla, close Square, close Berkshire. So I still have FIT. Oh, IBM I still have on, but these IBM calls are for December, so I have 39 days out. I bought the 135 calls on IBM. And I was actually, on Friday, I was actually pretty impressed on how it was holding, but today it did break down. But we're still mid-range for the low here. I was actually thinking it was going to bounce back up to 130, and I'd take that off. But right now we're down here. PCG and EIX due to fires. John Darker. Let's see. So PCG, I mean, I personally don't like buying stocks based on natural disasters because it's not something that you can, how do I say this? It's not something that you can replicate or understand sometimes. Sometimes there's a lot of factors that go against you. But yeah, this is a crazy, crazy gap down. Let's see what PZ... Does this have volume? Yeah, this is going to be messed up. So, like, if I was going to trade this, you have to be very careful to only trade the strikes that have volume. Like, the 41 puts have volume, the 46 puts. And right now, because it gapped down so low, they don't have all the strikes available that you need. Let's see if we can go to all. Let's see what... Yeah, they don't have... So right now, it's like a no trade unless you're bullish on it because, like... They don't have all the strikes available because of the amount that it went down. I bet you, because I mean it's down 17%. I bet tomorrow will be a lot better. They'll probably open some strikes up. Yeah, because I mean it went from 49 down to 24 like in a day. So, the one thing that I would say, because it moves so much, implied volatility is going to be high, and if it doesn't get the bounce that you want, it's going to be hard to make money because the option prices are definitely going to be inflated. Easy, what's up? Nightcrawler in Motion. What's the best option platform? What do you use? I like Tastyworks. They have low fees. I don't like their charts as much, but I mean fills are good, prices are good, everything is good. Easy's making money while you're sleeping. The American dream. That's what I'm talking about. You have to excuse me, guys. I'm kind of battling a little cold. Make money while you sleep. So So yeah, I mean, I like the Tastyworks platform. I like the charts. As you can see, I use Thinkorswim and Tastyworks. I did get TD Ameritrade to lower my commissions, so they're still double Tastyworks, but they're not. I don't have to pay the $6.95 per trade plus 75-cent contract. So, you know, that's nice. If you want to lower your commissions on TD Ameritrade, I also have a video on that. Been in the dentist office for the entire stream. They keep asking me what you're talking about. Tell them that crypto slays. Been busy, got paid to learn options. Nice. Crypto Slice, glad to see you in here. No more Coke. Yeah, I have a cold. I got water today. I got water. Greg can't type. I can't talk, and I got a super stuffed up nose right now. Glenn, how you doing? You guys are piling. I was late today. You guys are piling in at the end of the stream here. Jack, again, I want to thank you for your 50 bomb. Thank you so much, man. No more Coke. I don't know. I know we talked about Coke the other day on here. Well, Coca-Cola is still ripping. All thanks to my stream. No, I'm just kidding. But yeah, I mean, Coke is not slowing down. This is actually a pretty interesting chart here. Looks like they this could actually Coke actually might be a good trade. I mean, it only went up 19 cents today. I don't know if it's gonna fall though. But I would look for a little retracement down to 48 here. Rayleigh got puts on Coke. America's medicine. Yeah, but I'd be looking for it to fall down to 48. Good call, Rayleigh. Good call. We're thinking alike. Richard, what's going on Facebook? Oh, man. So, I have stock on Facebook. My average is $88 a share. And, you know, it is what it is. One thing about Facebook is they're making money, but they're facing a lot. Every day on Facebook, I see a news article saying that, you know, you should only spend 10 minutes a day on Facebook and Snapchat because, you know, there's a new study out that says that it's linked to depression and stuff like that. So they're having like a lot of bad press right now. And also, a lot of people are spending less time on Facebook, and a lot of people are, I guess, spending more time offline. I would say, you know, at the size they are, they're facing challenges growing. They're still going to make ad revenue. They're going to still make profits, but what Wall Street's looking for are new people signing up, and how often they go on Facebook, how long they stay. And right now, that number is decreasing, and as you can see, the stock is reflecting that. So, you know, we're sitting at yearly lows here. You know, right now, we're sitting at some support. Next support level is like 120. Oh, you can't see. I got it. Wish I could auto adjust my face. You know, next support's down here at like 120, 116. So, if it doesn't hold 140 here, watch out. This actually is probably a good place to put a strangle on. You know, honestly, let's see what the pricing comes in at. Do it for next week, or we could do it. Yeah, I mean, they're expecting a $4 move. They're a little bit on the pricey side, but if you did like something like this, or you did something like a bearish skewed, this could probably work pretty good. You know, the 138 put, 147. Or you want to do the 139. So if it breaks below 140, you get kind of take advantage with that 140 put. It's under $2 for this, so not terrible. It's a higher price stock, so you're gonna have to put up a little bit more cash than you would on a lower price stock. But this is probably not a bad play if you're bearish on this. You know, but the bounce back, as you can see down here, though, the one thing you gotta be concerned about, the bounce back to 150 is real, so you can protect yourself. So with this 147 call, if you're bearish on this, you could definitely protect yourself with this 147 call. If it bounces up to 150, 149, you know, you're gonna be okay. It is almost half a trillion market cap. I have no idea how they will maintain. Yeah, that's what they're showing now. Like Wall Street has just been giving them money because they've been growing, and sooner or later that just catches up with you, you know. And that's the intersection that they're in right now. It's like, can they grow? Can they continue to make money? There's only 7 billion people on the planet, and 3 billion of them are on Facebook. You know, can they go to third world countries and underdeveloped countries now? I mean, that's really what they're looking at in terms of growth. And you know, younger generations aren't signing up to Facebook. I mean, they're going on Instagram, but they're not monetizing Instagram as well as Facebook. So, anyways, got a couple minutes left. If this stream was of value to you, even though I was late, hit the like button. Jack, again, thank you so much. AAL. Easy with AAL at the end of the stream. I'm seeing an ascending triangle. Yeah, I mean, right here at like 36 really looks like consolidation. Let's go to the 1 year. Yeah, seems to like this area. Once it consolidates and wants to push higher, looks like it wants to push higher. I mean, 40, 42 definitely on deck. 40, 42. So yeah, good trade. Good trade right here. Nice chart setup. Yeah, pretty liquid options here. Yeah, you should have no problem with this. I mean, if you bought the 39 call, you probably want to buy something a little bit. Let's go to December. Yeah, I mean, if you bought like the December 39 call, should be good. The December 7th 38 call. You know, that's probably what I'd be looking at. Just be careful when buying around Thanksgiving and going into the holidays. The market tends to slow down a bit. So I don't know if it's going to happen this year, but because we've been kind of crazy. But just so you know, people take vacations. I mean, market may slow down here, and when it does slow down, it's going to crush these premiums. It's going to crush it. So if the market slows down, just stops. Like if the market just stops and just consolidates and just kind of chills for a while, like these premiums are going to get smashed, which option sellers are pretty much dying for right now. So anyways, like I said, if this video was of value to you, hit the like button. Richard's up $200. Congrats. Nice. I'm going to be signing off here. If it's your first time here, hit subscribe. Push the bell to get notifications, and hit the link below to our free options trading group in there. I post all our trades in there. Very, very active community, probably the best options community around. I know I'm biased, but I mean, everyone's been super nice, super chill. It's a very relaxed environment, you know. So I want to thank you guys again. Jack, thank you again. Can't thank you enough. You guys have a great day. Thanks a lot.